Well, folks, I have some absolutely insane stuff to share with you in this video, okay? I was just listening to the Target conference call right now, and I was looking over some stuff that I'm absolutely blown away by. And you know me, I keep track of, obviously, my stocks. I keep track of like travel stocks. I keep track of banking stocks. I keep track of big tech, things like that. But there's certain stocks in the market that I don't usually keep track of, but I do have this watch list. And what I just witnessed is absolutely shocking for this one specific list, okay? Now, futures are tanking as I'm recording this. I'm recording this past 2 a.m. right now, and I'm recording it outside. The weather's probably 77 degrees. It's beautiful. Futures are tanking, okay? And so NASDAQ's likely going to be at a new low. We'll see. It could come back, or it could get a lot worse. We'll see what happens with that. That's a big prediction game. But as of right now, we'll open at a new low for the NASDAQ in quite a while, okay? So everybody saw Target today, right? Shockingly dropped 25%. We all witnessed that. And that was shocking. Just shocking, okay? Because you never see that. The last time Target fell like that was 1987. 1987. Like, that doesn't just happen. 25%. So you watch that, and Target's usually considered one of the safest stocks in the market, okay? Walmart in the past 5 trading days has fallen over 17%. Walmart in the stock market is considered a top 10 safest stock in the market. And for that stock to fall over 17% 5 trading days is absolutely shocking. But this is actually just kind of the tip of the iceberg here, okay? Look at Dollar Tree. Dollar Tree fell over 14%. They didn't report earnings. Nothing. This fell 14% in a day. For Dollar Tree? Are you kidding me? You got to be flipping my flapjacks for Dollar Tree. No way, man. No way. It's a dollar store, and it falls 14.4% in a day? Come on, man. Look at Costco. Costco in the last 5 trading days is down about 12%. These are considered the safest plays you can possibly be in the market. This is Smucker's, okay? They make jam and jelly. This stock fell 10%. You got to be flipping my flapjacks, okay? And by the way, like I said, I'm recording this past 2 a.m. I'm trying not to wake up neighbors. I'm trying not to wake up the family. But I'm out here. I got to record this for you guys. I know a lot of people say, Jeremy, you need to get sleep. Listen, man, here's the deal. Very rarely the stock market ever crashes. It's crashing this year, okay? 2022 is the year of the crash. So I can either like cover all this in this epic year, or wait another 10 years or 20 years until the market crashes again. I got to cover everything that's going on here, okay? SJM, come on, man. This is supposed to be one of the safest stocks in the market, down over 10%. Look at Kraft Heinz, 9.5% in a day. By the way, KHC, Kraft Heinz, this is supposed to be one of the safest stocks in the market, right? Over the last 5 years, the stock has fallen 56%. They sell ketchup and mustard and stuff like that. So, you know, that whole notion about like, oh, you know, some of these stocks are so safe or something like that, BS. It's complete BS. When you see these stocks fall like that, you start to realize, oh, you know, everything's not as safe as they say it is. Like, they told me these stocks were so safe, right? And the worst part of these stocks are, they don't even have big upside. Like all those stocks I just went through are pretty darn boring. Like, they have very limited upside. And it's like, man, if you're going to lose some money, you might as well at least lose money in ones that have, you know, insane upside over the next 5-10 years. You know, to lose money like that in these sorts of stocks, I mean, over a 5-year span, the stock is down 56% for Kraft Heinz. Come on, man. You'd be kidding me there, okay? Campbell's Soup was down 8% in a day. 8%? By the way, this one over the last 5 years is down 17%. What is the point of putting money in Campbell's Soup to lose money? You know what I mean? And you go down 8%? Heck, I don't even know if Shopify was down 8% today, and that's saying a lot, right? General Mills down over 7%. At least this one's up in the past 5 years. It's up 20%. Last 5 years, oh my gosh, what a joke, okay? So, S&P 500 here, essentially, you know, people look at like the indexes and they say those are safe, right? Well, you know, when I got in the market in 2008, the end of 2008, right? And if I talked to anybody about me getting into stocks, you know, what consistently came up was the stock market's a scam. Nobody said buying individual stocks is a scam. Everybody said the stock market's a scam. But why did those people say that? I think one person actually didn't say that. They said, hey, it's just a roller coaster ride, and you just, you buy when it's low and you hold, and over time you'll make a lot of money. But most people said the stock market's a scam. And the reason they said that is because these are people that had invested their retirement funds into the stock market or whatever, right, into the indexes. And all these folks at the, peak to trough, their values went down over 50%. Over 50%. The S&P 500 in that crash fell over 50% peak to trough. The NASDAQ fell over 50% peak to trough. The Dow fell over 50% peak to trough. So the Russell, NASDAQ, S&P, Dow all fell over 50% peak to trough. This is why when I was getting in the market at the end of '08, everybody said the stock market's a scam, because everybody was down massively. And somebody that had a retirement fund of $500,000 was looking at their retirement fund, and now it's $250,000. And they're like, I can understand, especially if you don't understand the stock market on a high level. You're looking at that thing and you're like, this is a scam. This just took half my money, half my net worth, right? And so even the indexes, people are starting to realize that's not safe either. This is what I try to explain to folks. I'm like, everybody understands when you buy an individual stock, there's risk, right? And there's a chance that that stock will never come back. There's a chance that it could take years to come back. But with the indexes, a lot of folks are almost trained to look at the indexes as like it's some like holy grail, and you never lose money or something like that. And it's like you can go down massively. You could potentially go down massively for years, depending on the situation, right? And just like a stock, you could panic sell. You could panic sell in an index as well, right? And so, if you got 10, 15, 20 stocks in a portfolio, individual stocks, like the chances all those go down forever is a pretty low probability. If you got all your money in one stock, it's a whole different situation, right? So these are things to kind of keep in mind. Now, when it comes to the indexes, Jeremy Grantham, my evil twin brother, okay, he has been saying we're in a bubble, right? And he said he expects S&P 500 to fall at least 40%. He told CNBC this recently, okay, in the past 24 hours. And he says we're going to be in some sort of recession pretty quickly. Could already be in that recession. That's all for debate. But nonetheless, we're down a little less than 20% for S&P 500. Now, the NASDAQ and Russell have freakishly fallen way more than the S&P 500 and the Dow. Usually those are kind of in line with each other. But that's not how this is playing out right now. So it's a very kind of freakish time we're going through right now. I can say that, okay? And so Grantham's saying this market's about to fall a lot lower, all right? And so basically what he's saying is Dow's going to hit, S&P 500 is going to hit 2,900. We're at 3,900. If that's accurate, we got to fall another 1,000 S&P 500 points. That's a long way. That's a long way. That would be back to levels of 2018, 2017. If we fell all the way down there, okay? And so that's a pretty darn substantial fall if that was to happen. Now, whenever we're going through a rough market, what is the thing that happens, right? Everybody pays attention to all the bear headlines, and it doesn't mean they're wrong. It's just like bear headlines a lot of times get buried unless it's the beginning of a new year or unless you're in a horrible market. And let's be quite clear, we are in a horrible market. When the NASDAQ's down around 30% year to date, 5 months into the year, you are in a horrible market. When the indexes are getting sliced and diced, and when you got stocks down 50, 60, 70, 80% year to date, you are in a horrible market. So we're in this awful market. And so Jeremy Grantham makes a prediction like this, and maybe he'll be right. We'll have to see. But I can tell you, a lot more folks are going to take it serious because of the market we're going through. If the market was high flying right now, no one would even care about what Jeremy Grantham has to say. But the fact that the market's been tanking, everybody's looking. They're like, what's he saying? Oh, we're going down to 2,800? Shoot, man. We got a lot more to fall, okay? Now, this is why for me, for this year, right, I'm fully committed to buy this entire year because maybe it comes true what Jeremy Grantham's saying. Maybe we fall down to 2,800. That'd be insane. But maybe it happens. This is why, for me, for this year, I'm ready to buy this entire year. Because this could happen. And so I'm like, I'm ready for it. I'll buy this entire year. I'll increase my ownership of these companies at insane pricing. If we go back to where S&P 500 was back in 2017, okay, it is what it is. Like, I'll buy at those levels, and I'll continue to load up on stocks. I think it'd be a little wild and kind of silly if we follow those levels, but I'm not gonna rule it out. I'll never rule it out. I'm also not going to plan for that and say, oh gosh, we're falling to 2,800. Let me sell all my stocks, because that might never happen. Who knows? Bears make predictions all the time. And, we're in a bubble and, we're going to fall to this price and that price. Most of the time it doesn't come true. The high majority of the time it doesn't come true. Every once in a while it does. So for me, how I like to play this is I'm just going to add. And if we hit S&P 2,800, we hit it. If we hit 3,100, we hit it. 3,400, 3,800, whatever, right? I'm just ready to buy, and increase ownership. I'm mentally prepared for that for the whole year, right? Now, Wall Street's in a full-blown panic attack now at this point, okay? A full-blown panic attack. We watched what just happened with the Melvin Capital situation. They are freaking out. You gotta understand, when you were seeing Smucker's jam fall 10% in a day, when you see Target stock fall 25% in a day, when you see Walmart stock fall 17% in 5 trading days, Wall Street is in a full-blown panic attack right now. They don't know what way to go. So what Wall Street's doing right now, they are going to cash. They have been going to cash, but they're going even more, okay? That's part of it. Some of them are returning money to investors that are running funds because they're like, we don't know what the hell's going on, so we're just going to give you the money. You know how confused and panicked Wall Street has to be to give the money back to investors? You know how, like, come on, man. That is full-blown panic mode. When they're like, dude, we don't know what the hell to do. We're so lost in this market. Just take your money. Take your money. We don't even want to collect fees on you because we are lost. That's when you know the market is in full-blown panic mode. And so a lot of people look at the VIX, right? And the VIX is a good indicator of the market being in panic mode, but I don't think that's the only indicator you should ever look at when it comes to seeing how panicked people are and how panicked Wall Street is. I think it's a pretty damn good thing to see when Smucker's jam's down 10% in a day for no reason. When Kraft Heinz is down 8% in a day for no reason. When Target falls the most in a day since 1987 for, I don't want to say no reason, that is a reason, but 25% in a day. When Wall Street's giving money back to investors, that means they are in panic mode. They are in full-blown panic mode. When they're going to cash, when they have no clue what to do. I was watching a billionaire fund manager on the CNBC had some comments to make about the market. And I think it was Sarah Eisen was interviewing him. And while she was interviewing him, she was asking him a lot of very direct questions about, like, what to do. And she had to, like, keep going back to it over and over again because he kept kind of dodging the question. And all that told me was this guy has no freaking clue what to tell people right now. She kept going back, and it's like, does it mean cash? Does it mean buy puts on the market? And he kept kind of trying to evade the question almost. And it's like, when Wall Street is that unconfident, right? When they're that unconfident, they have no clue. The only ones that have confidence right now, the only ones are the ones that are super bears. That's it. The super bears have confidence right now to say S&P is going to 2,800 or 3K or 3,100 or whatever, right? So they have the confidence. But everybody that's not a super bear, none of them have confidence. I have confidence, but I'm a very small amount in the market. And so I'm looking at Wall Street in full-blown panic right now, and they don't know what to do. They are lost. They don't know whether to short this market. They don't know whether to buy puts. They don't know whether to buy calls. They are completely lost. And I think the reason they're completely lost is they lost their daddy. They lost Mr. Powell. And because they lost daddy, they don't know where to turn. They don't think the U.S. economy can do anything without Mr. Powell behind it. And so until there's a change, they're basically on a buyer strike. And I spoke about this in a video about a week ago. And if you didn't get to watch that video, go watch that video. What I touch on in that video is something we almost never talk about on the channel, and it's liquidity. It's liquidity in the stock market. And when you see these moves these stocks are making, when you see a Dollar Tree down 14% in a day for a dollar store with no news, that's a liquidity crisis. That's not a valuation crisis. That's nothing else. That's a liquidity crisis. We have a liquidity crisis on our hands in the market right now where folks are just selling stocks and you have no one on the other side to buy these dang things. And so any bit of selling pressure just sends these stocks down massively. And it's like, and you see that in countless of these stocks, and that's how you've gotten these stocks to fall 60, 70, 80, 90%. That's how you got it to play out, right? So, once again, for me, I'm staying focused, buying stocks, increasing my ownership for this entire year. And if we fall to where Jeremy Grantham says at 2,800, we fall down there. And I'll pick up a lot more shares for cheaper prices than I ever thought possible, and that will be what that's going to be. But let's be very clear, Wall Street is in full-blown panic mode, and to me, there's no debating that. There's no debating that. Hope you guys enjoyed this as always. Follow me on Instagram, say hello, much love as always, and have a great day.